It's funny, whenever you buy Bitcoin first time, you always feel you're late to the game. I bought December of 2013 in the when it crashed to 600 from 1200, and I bought my first one Bitcoin. I didn't know what it was. I just thought, oh, it's like digital gold. Let's have a shot at that. But like, I felt like, gosh, I'm so late. Dates way back, and you hear all the OGs talking about it in the white paper and Silk Road and all those. It's almost like mythology now to me. Some of those early stories of Bitcoins. I'll always have a big stash in Bitcoin because that's your sovereign wealth. If the entire system implodes, you've still got your private keys. So, I mean, that's, I think, the biggest reason to hold Bitcoin yourself. You can invest in other very exotic stuff that can keep up with it, especially crypto related. But like Bitcoin's the only game in town for kind of against, the zombie apocalypse. You'll be safe with Bitcoin. I think I tweeted recently, there's only two things you need to know how to get rich with. One is very good understanding about risk, and second, a good awareness of how much risk you can stomach, and so anyone can be rich with Bitcoin if they can stomach the downside and hold on till it reaches the other end. That's the whole gamut of different time frames. It's not easy to hodl. 4-year cycle of Bitcoin, you get a bull market, and then you're left with mostly a year of maybe 80% retrace. You then, you repeat the cycle again. And we've really much attributed that to the halvening. The reduction of new coins being mined and sold onto the markets gets halves. This impulse of supply shock. There's less being dumped, and so the price runs up. And in actual fact, we've only had 2 cycles of 4 years. The first cycle wasn't a traditional cycle. If you look at the structure of the market, the miners didn't even sell. They were, if you're in 2009, as of 2009 January onwards, you could mine it, and everyone was doing everything they could to mine the coins. Didn't sell because first you couldn't sell, there was no markets, and then when they were available, they still didn't sell. They were still mining because they were believers. So the first cycle was not marked by any mining sell pressure. And it was just sheer vertical wall for years because there was very little selling. And that marked our first cycle. And it was not like any other cycle. It was very much an outlier. It was vertical. And then we had 2, what we typify as our normal 4-year cycles, where we had an accumulation range, a sell down, a very hard sell down, 80, 90% or even more. I think the first one was even, it was over 90%. Then we did it again. We sold down in the 2014 era, and then we had sold down in the 2018 era. And everyone's thinking now it's going to happen again. But if you were to look at, remember the 2 really typical textbook perfect 4-year cycles happened powered by the halvening, which is a reduction of the mined coins being sold onto the market by half. 2017 was the last bullish impulse we had from that, where I think it was pristine. As of 2018, we had our futures markets developed, and BitMEX started to take the majority of the volume. And then you look at the money that they make. BitMEX, of course, trades in Bitcoin collateral, everything's Bitcoin. And so here, BitMEX is making billions of dollars. They're doing billions of dollars of trading per year, per day. Of course, what are they doing with that money? Maybe some of it's held, but a lot of it is sold to cash to pay for the operational side of things and, the founders' luxury expenses. A lot of that money is being pulled out of the ecosystem, sold from Bitcoin to cash, and that effectively is a tax on the network and then sold to fiat. I'm going to tax anyone who's trading on BitMEX, and I'm going to sell it to fiat. It's a net sell pressure, no different from mining. Mining is a tax on the network, meaning that I'm diluting the supply. So it's a hidden tax on the network, and also a fees tax on the network who's transacting, and I'm going to sell it back onto the market to pay for my mining overhead. So those 2 fundamentals are no different from each other. If you're a business that's earning Bitcoin on the network and you have to sell to fiat because you're paying salaries or you're needing to do that, because we're not in a world where Bitcoin is the currency. We do sell to US dollars to buy stuff. That effectively is the supply side equation to Bitcoin, a constant supply side, unlike investors buying and selling, right? This is a constant. Like the infrastructure of Bitcoin is relying on miners, exchanges, and now ETFs and, all the complexities of the loans market. These are parts of the ecosystem, which are businesses that for the ones that generate income in Bitcoin, some of that is going to be sold. And so as the ecosystem develops further, we're going to have more and more of the infrastructural sell side. And that infrastructure was very simple in 2017 and earlier. The only infrastructure really of dominance was mining. Now derivatives and options, and even Grayscale ETF charging 2% fee is 4% of the mining network and sale pressure. When you balance that out, like the halvening in a year and a bit, 2 years, I forget, that is now not going to be a halvening because you've got all this other complexity of the infrastructure that is making Bitcoins taxing's harsh because they're providing services, but they're earning and then they're selling. The next impulse to drive the next cycle, so-called cycle, is not going to be an impulse. It's already, I'm calculating already the mining equal match to the exchanges sell pressure, kind of a low volume days. We're in an era where what the exchanges are doing in their volumes kind of more dominant. And if it's highly volatile, if say it's screaming upwards, then there's going to be more sell pressure from those exchanges. The demand supply equation's changed, and anyone who looks at the chart closely will see how choppy it is. We're not really templating 4-year cycle currently, because you would have thought, most people thought near the end of this year would be end of this 4-year cycle, but instead we had this mini bear cycle pulling back from 60 to 30, and that's just taken all of the FOMO, highly speculative nature of the market out. We've had a total reset and things are quite cool right now, yet we're gearing up for another run. And I think we're going to see more of the same, that we're going to get a run and then the wind's going to be taken out of it, and we might get, a pullback, and it might take 4 months to recover, and it might be a 50% pullback. Or I think that's the sign of things to come. We'll still have bull bear markets. I don't think they're going to be these 4-year macros. The 4-year thing is like, I think of it like planets in orbit. Bitcoin is a planet with a 4-year orbit, and that's created by its own kind of internal gravity. There's all these different forces pushing it, and they're running on different cadences. And eventually, and what we're doing right now is breaking free. I think we're breaking free from the 4-year internal gravity of Bitcoin and being pulled into orbit around traditional macro cycles, which are, 10 years or longer. We'll still be in a cycle, but it's in orbit with all the other large asset classes as this thing starts to get heavier and heavier, and the traders and the investors start to reflect the traditional world. So anyway, what have I been up to? The latest stuff has been, probably a few people probably understand that I'm more than just doing on-chain. I'm a general partner in 3 hedge funds. Right now, I'm working on 3 kind of market neutral funds of funds, not necessarily market neutral, some of it's directional, but to just really looking at how to build a sandwich of different, essentially instruments to create a new kind of instrument. It's really important for me to have something that's like a cash instrument and more than compete with the money printing, which is, maybe 40% per year. So trying to look at getting a yield above 40%, which is quite doable in the crypto space. Cash and carry is like 25% just doing Bitcoin. And if you really know what you're doing within the funds, you can get much higher. So I'm looking at that, exploring possibilities of building an instrument that can keep up with Bitcoin with much less of the downside, if any. So really, a lot of the stuff is what I want for myself, but some of it is really pertinent to the funds that I'm involved with.